What's up, guys? Welcome back to the channel. Thanks for tuning in. Today in this video, guys, I want to talk to you about some undervalued altcoin gems on FANTOM. Now, you can kind of see one of them. This is semi-undervalued. Actually, I would say it's a bit undervalued. But I'm going to go ahead and talk to you guys about a couple of them. And at the end of the video, I'm going to dive into one a little bit deeper that I'm pretty bullish on. But anyways, let's go and get into the video. And we're going to start with Liquid Driver. I'm going to shrink my face and get out the ADHD notes so you guys can follow along. Now, the very first one that I want to talk about, obviously we have Toon Finance, Beethoven Finance, and Geese Finance. I'm not really going to talk about those. Everybody knows about those. And some people know about Liquid Driver, some don't, but some really don't understand the mechanics behind it. Now, the reason why I really like Liquid Driver is because of the gauges that they have. Now, let me go ahead and explain to you what Liquid Driver is. So what Liquid Driver is any of these pools, like Liquid Driver Phantom, Spirit Phantom, Phantom FUSDT, etc. What they're doing is if you deposit into these pools, they will give you an APR in Liquid Driver. Now, these APRs are actually higher than what you can see like on Spirit Swap, or that you can see on Spooky Swap, as you can see when you scroll down, or even on any of the curve pools. Now, how they do this is they're actually paying you in the Liquid Driver token. But in exchange, on the back end, what they are doing is they're actually taking your quote-unquote Spirit token in this pool and are actually depositing it into the Liquid Driver Spirit Vault, which is Lin Spirit. This is going to be like your quote-unquote liquid staking Spirit. And other people can do this as well, but when they're doing this, they are actually directing liquidity to these different pools. So on Spirit Swap, you have, or they have a certain amount of tokens that they can give out. If they just give out infinite tokens, then that's going to hurt the rewards. And if they give out too small, no one's going to want to provide liquidity. But they have a problem. They can't just throw it at all the pools, because if they do that, I mean, there's going to be one pool with like $1 million in TVL and another one with $10 million. They shouldn't get the same rewards. The one with 10 million should get more. It should have more tokens allocated to it. And this is what Liquid Driver is doing. This is taking the most common and the pools that are actually being used the most and bringing them over to Liquid Driver and giving higher rewards. Because on the back end, Liquid Driver is taking those Spirit tokens and locking them up and using them to vote. So this is very important, because if you have a farm that is literally just letting you LP, quote unquote, they're renting your liquidity, people are going to dump that token. I can tell you from experience, because that's what I do each and every time. I just take the tokens, farm, dump, farm, dump, farm, dump. That's just what I do, period. And that is what most farmers will do as well. They will farm and dump the tokens. Now, when you have this happening, this is going to hurt the token price because the APRs are inside that token. And Liquid Driver is actually protecting against that. I mean, not fully. They are still having somewhat of a renting going on, but they're actually exchanging your token for the quote-unquote Spirit token or the Spooky Swap token, which they are using to their advantage by actually depositing that quote-unquote Spirit token into InSpirit and going on the Spirit Swap gauges. What they do is they go inside these boosted farms with their quote-unquote InSpirit, and they will actually come over here and vote on any of these pools. Now, when they're voting on those pools, that's going to direct the liquidity there, and most of the Spirit tokens go there. I know it's not actually directing the liquidity there, but what's happening is they're voting on rewards going to this certain pool. And what will happen, it'll be higher rewards over here. So it's not directly doing it, but people are going to see higher rewards and they gravitate towards it. That's how they're quote unquote directing the liquidity. Now, if we go back to Liquid Driver, I'm uber bullish on them because Dr. Liquid, he is a straight whiz when it comes to DeFi. Now, he's doing this with InSpirit. I want to give a shout out to Professor Crypto Banana. Make sure you guys check out as well on YouTube. But he pointed out that they are actually working to accumulate FXS. So they're actually bribing people for voting with their liquid tokens with FXS. Now, this is really interesting because on the governance, if you check under the governance snapshot page, this is where they talked about the Frax and Phantom. So this is going to give FXS for it. So this is really interesting because now they're starting to take on the curve convex model, and it's actually coming into fruition. We are going to have a lot of different curve convex narratives going on. Another one is like Saber and Sunny. This will happen across chains and all over because it's a successful model. Typically when you have something successful, you'll see a bunch of forks with it. So this is going to be pretty interesting with Liquid Driver and Spirit playing out. And this will be a constant cycle because if you get more rewards on Liquid Driver because the token price is staying up because people are locking it up to keep voting, the APRs still stay up. So more people would rather go with the higher APRs. So that's why it creates the flywheel effect. Protocols like Liquid Driver, Curve Convex, and so on can still exist. Now I'm going to give you guys these two examples. Option 1, release your token and just rent the liquidity, and people are just going to farm and dump your token, which is what happens to about 99.99999% of these farms. The second option is build on someone who is able to direct liquidity and give some of your tokens in exchange for the rewards they earn in the quote-unquote farm, aka Liquid Driver, giving liquid or LQDR for the Spirit tokens. So this is completely different than the original concept, which was just here's our token, farm in our pool, and maybe you can stake and earn more of our tokens. Stake your stake and earn chicken, right? No, not here. It doesn't work like that anymore. People have learned the system, they just farm and dump. This is why this is important. Liquid Driver understands and sees this success in Spirit, or not in Spirit, but success in the Spirit protocol, and they are leveraging off this. That's the same thing what Convex did with Curve. Now you are going to see other models like this. Just want you guys to understand that concept so you guys can look for that yourselves. Now I want to go to the next tokens. It's going to be Taro and Scream. The first thing I want to mention about these guys is the devs. They're nuts and ham. I mean, dude, on Taro, the guy, Tigress, dude, he is working his buns off. Like, he is constantly in the Discord, constantly messaging, constantly rolling stuff out. Just take a look at what he's doing, and that is the same thing with the Scream team. These guys are literally cranking out stuff. Now, the reason why I really like both Taro and Scream, I don't have them up, because again, this is for people not in the US, but I know people not in the US watch this video. So, with Taro and Scream, you can look at them like yield-bearing assets. Now, I'm going to break down Taro first. So, Taro is a leveraged yield farming protocol. What happens on Taro is you can actually take your LP tokens and they collateralize them or use them as collateral so you can borrow against it and then borrow some of the quote-unquote LP tokens to leverage your position. So what will happen is, say for example, I have one Phantom, or let's say 50 Phantom, and I don't know, 500 USDC. This is not correct, but let's just say the two token pairs equal $1,000. So what will happen is I deposit those LP tokens in there, and then that $1,000 will then be used to go buy some more Phantom or USDC and deposit them in there with my liquidity pool again. So now I'm actually able to take on a position of 1,800, 2,000, or depending on the multiple X's. Because once I redeposit, now I can borrow more again. So if I borrow more, I can deposit more and leverage up my position. This is risky because if the assets are volatile and move in prices, you have a potential to be liquidated, but you are compensated with rewards. So that is something to keep in mind as well. But the reason why I say this is very important for Taro is because if people have these yield-bearing assets because they just deposited into the pool, this is very important to understand because when people deposit into the pool and they deal with leverage, they're willing to pay higher APRs. Now, if people are paying higher APRs, who's going to provide the tokens that they can borrow and lend and use? Well, it's going to be the people on the other side who lend them. Now, if there's a constant demand, like a leveraged demand in using these tokens, they're going to pay a higher APR because they know they can get a higher APR as well on the other end. So they're willing to pay more. So what you could do is you can leverage something like this by depositing the tokens in there. And when you do, you get quote unquote B assets or even T asset. what happens on Taro is I deposit quote unquote ETH, or let's say Bitcoin, whatever. I deposit into the pool and it gives me a quote unquote T token. Now this T token is a yield bearing asset. It is already earning me about 10 to 15% depending on the rates that are going at. So I'm happy, I'm good with 15%, and I just take the doo-doo receipt and I just put it in my pocket and I just call it a day. Now, it doesn't stop there though. Other protocols can leverage this asset by taking this quote unquote receipt that you have now and allowing it to deposit into their farm. You're still earning interest on this receipt because it's a yield bearing asset. It is constantly appreciating in price. And I'm able to borrow against this receipt because I can use this as collateral. So this is where self-repaying loans come into play. This, say it's earning 15% and my loan is 7%. Over time, my loan is actually being paid down. So what will happen is over time, my health factor will actually go down as long as the asset doesn't go down in value. So this can be leveraged with other protocols because now I'm using my yield bearing asset, depositing, borrowing against it. Now I can take these borrowed tokens, I can go deposit them into a yield farm to earn me additional yield. I can use it to speculate onto another position. I literally can do whatever I want with it, or I can even throw it back into the farm and take a leveraged position inside the protocols. Now this is something I want to mention on Scream as well, because they have these same tokens. They can't pay as high as the interest. I mean, they can if they want, but it's not going to be there because Taro is dealing with leverage. With leverage, it gives higher APRs because people are willing to pay a higher amount to borrow because they're getting a higher reward on the other end. So typically in something like this, Taro is going to give a higher APR. Now Scream is one that is interesting because it does the same concept, not as high of an APR, but they do list some pretty interesting assets. It's the same thing with Taro. They list interesting assets as well. Like Taro, you can borrow or you can lend out your spell and you can get the quote unquote T spell token. And that's the same thing on Scream. You'll get the Scream spell token or you'll get the Scream USDC token. And they already have some DeFi building blocks that are out there on FANTOM. Like for example, if you go on My Finance, you can use your yield-bearing Scream tokens or your yield-bearing Beefy Finance tokens because you deposit into Beefy. What it'll do is it'll loop your quote-unquote USDC inside these pools to earn you a higher yield, and you can actually borrow against them in My Finance. So this will give you a quote-unquote self-repaying loan, and this is kind of like the if you can, like the golden cross on the chart, it's the same thing with DeFi. It is the golden cross in DeFi, a self-repaying loan. Now, the third one I want to talk about is creditum. Now, creditum is straight fire sauce. I love this team. I love this community. They actually came out from the quote-unquote stake. They did have a exploit that happened months ago, and they are building from it. But I want to show you guys their protocol and talk to you guys a little bit about it. And I want to give a shout out to Sheen. Sheen, he rolled out on this and he's literally constantly building. This guy is a whiz when it comes to DeFi, and he's really knowledgeable in the DeFi space. Now, I want to show you a little bit about this protocol and why I'm so bullish on it, and so you guys can understand the concepts behind it. The first thing you need to understand before we get into this is something like My Finance or MakerDAO. What this protocol is doing is you're depositing quote unquote assets like YUSDC, Bitcoin, Ethereum, and you're actually using that as collateral to borrow some stablecoins. You are paying a 3% interest rate on this, or 3.5 for these. So it is going to cost to borrow as well as costing to mint. So that is something to keep in mind as well. So instead of just having general assets like FANTOM, USDC, DAI, they also have some yield-bearing assets. So this also plays with the self-repaying loans. Now with creditum, there are a couple of options you can take place. Like for example, if you just want to get some of these stable coins, you can actually farm them up here, or you can use the credit and FANTOM LP pair, and you can actually farm over there as well. This is going to be the pool 2, so this is typically the dumper, so that is something to keep in mind as well. But when in doubt, you can always go with the stablecoin pool. This is not without risk because you are taking on CUSD risk, But I'm going to explain to you how the CUSD keeps peg and what helps maintain CUSD. This will also give you the stats for the creditum protocol. Right now, there's about $10 million in CUSD that is minted, and the total collateral is $16 million. So right now, if there's a quote-unquote bank run, there would almost be, well, 1.5 times the amount that is deposited. So they will be able to repay everyone. So like if someone wanted to exchange their CUSD, they can come here and get all of their quote-unquote collateral back because it's over collateralized. This is not something like a algo stablecoin, but this is a collateral backed stablecoin. So this is actually going to be backed by something. So you can go to the quote-unquote bank or go to this protocol and get your money out. Now, this is the introduction on creditum. We kind of went over the explanation, but they do this with over collateralization. So this is very important to understand. These are a couple things you need to understand when using this. Is you have the stability fee, which is that 3% I mentioned, and then you have the mint fee. This is 0.5% when you mint. So say you mint $1,000, 0.5% is going to be used and put into the quote-unquote treasury of creditum. So I'm sure this is going to be used for growth. This is going to be used as a backstop. This is going to be something just like worst case scenario, black swan type of event. Now, the max debt ratio is the amount of collateral you're able to borrow. If you go on to the home page, you can see this shows like, hey, if I deposit $100 in FANTOM, my loan to value, the max I can borrow is 50%. So I can only borrow $50 worth if I deposit $100. You don't want to borrow $50 because if you borrow that and there's a small price depreciation in FANTOM, you'll get liquidated. Your FANTOM is basically sold and you just have 50 CUSD tokens because you deposited $100 in FANTOM. And that goes to whoever liquidates it. That's how it holds the collateral, just so you guys can understand that. Phantom Alerts made a really good demonstration video on how to deposit into the vaults, mint some of these stable coins, and basically play around in any of these different farms and in the markets. So highly recommend you guys take a look at his videos. I'm mainly just explaining the back end. Now, there is a mint limit on the maximum amount. You guys can see literally here, this is the amount that can be borrowed. So right now, there still is a good amount that can be borrowed on here. So something to keep in mind as well. Now, when you're repaying and withdrawing, again, like I mentioned to you, there is a 0.5% fee. Now, keep in mind, this is based on a yearly basis. So say, for example, like this is the example they gave you, is it's 5%. This is going to be over the full year. So if I decide to pull out after 6 months, it's only going to be 2.5%. So it's actually half of that. And you can literally see how you can repay your loan. So it's very self-explanatory and easy to do. This shows the different farms, and here are the different contract addresses. Now, something I want to show you about the tokenomics, this is a really cool part about this. If you guys remember, they had the stake exploit. If you're holding some of this RVNT token, you are actually able to exchange it for some creditum. This was back in the day when stake had the exploit, and it was kind of like, what the snap, we got hacked or we got exploited. Well, no, this is how they recouped the users who were actually using the stake protocol. This is why I explain, this is why I'm uber bullish on the devs. These guys actually care about their community and are building a great community. Check out their Discord. Shout out to the big brains behind this, Zam and Entropy, as well as Sheen as the community manager. People like you, we love to see you guys in this space. You guys can see the other tokenomics, most are going to be released, and 17% mainly just went to the team. So I think this is a really healthy distribution. Now, some final thoughts I have on the creditum protocol. This is not a one-all be-all, no risk. Keep in mind there is such thing as smart contract risk, and there is a chance a black swan event does occur, and that there could be a chance that the vaults are under collateralized. This actually happened over on MakerDAO, but this is a very rare chance, and even MakerDAO recovered from something like that. Mainly the reason why MakerDAO was able to go under collateralized on Ethereum is because, well, it was on Ethereum. They had an issue with the gas fee model, as in like it wasn't bidding high enough. And when the gas fees were too high, they were not making bids to liquidate some of the positions. So that's why I also like that this is on FANTOM, because the gas fees are super low. So you can look at the risk as in almost non-existent. But yes, it is still a non-zero chance. So that is something to keep in mind, but it's a less of a chance than it was on Ethereum because of the gas fees. Now, another risk is, well, losing peg. So CUSD losing pegs. If you go on the CUSD markets, you have to remember these farms are helping hold collateral. So these are denominated in the creditum governance token. Now, right now, it's paying 86% APR for the stablecoin pool, and the credit phantom pool is paying 598%. So people are open to giving the tokens as collateral. But if this APR goes down lower, time will tell. We'll see what happens. What is the APR people are worth depositing into these pools? They are working on a VE curve model, so I'm uber bullish on that. And time will tell. We'll see if their emissions are able to sustain something like this. I'm definitely bullish on the team. I like what they're doing. And this is just a quick overview of Creditum and a couple of different farms I'm uber bullish on FANTOM that are, in my opinion, really undervalued. You guys know me. Invest in people, not Ponzi's. Anyways, if you guys want to jump in the Discord for more exclusive content, there's a link in the description below. It is the Patreon link. That is the quote-unquote Discord link. Just make sure you sign up with the VIP membership. If you want to understand what's in the Discord, it's just more exclusive content that's not shown on YouTube. And basically, you guys are seeing some strategies I'm taking in the market, what I'm doing in the market, as well as participating with some other DeFi degens just like you. Let's go ahead and leave you guys with a wisdom one-liner. We're going to hit you guys with Proverbs chapter 21, verses 5. The plans of the diligent lead to profit, as surely as haste leads to poverty. Guys, be diligent in what you do. Think about what you're doing. Be smart about what you're doing. You won't always make the right decisions, but learn from your wrong ones. We'll see you guys in the next one. You guys can also catch me on Tweeters. It's at rent a home fast, like literally at rent a home fast.